Hi, and welcome to the Market Alert for Tuesday, the 11th of April 2023. So yesterday the US markets were open, the European markets were closed. So these are the headlines really for the US yesterday. And the overnight markets or electronic markets that were traded during yesterday afternoon and the evening. Bitcoin bond yields and the dollar bid, as gold is pressured to the downside, no surprise there. Stocks have gone nowhere since the payrolls on Friday, which we'll look at in just a moment. Dollar bid, stocks recovering, holiday traders, CPI awaits. Yes, this is out tomorrow. Again, we'll look at that in just a moment. US stocks were ultimately unwound earlier losses. So the market moving lower to begin with, then being brought back. I don't know whether it was the plunge protection team or what, but it was a damn good move back to the upside during yesterday afternoon. And the shorts still dominate here, but unfortunately, they're fighting against the trend, which is to the upside. So as it says here, they're still waiting for the dip. Well, that depends on tomorrow's CPI number. So let's have a quick look at the news. Let's just wind back to last week and have a look at the non-farm payroll numbers, just so you can see where we were. Previous month they were 326. They were forecast at 228, and they came out at 236. So just slightly higher than the forecast, which really was pointless looking at on the Friday. Obviously it was Good Friday when they released them, so the market really hasn't done a lot since then, as it said in the headlines. So news for this week is more important. Tuesday we've got FOMC member Harker speaking, but what the market's waiting for, as it said in the headlines, is the CPI numbers out tomorrow. This will be interesting because they're forecasting a 0.8% drop in the CPI numbers year on year. So again, if that comes out like that, then the markets will explode to the upside. If they come out higher, then it'll be a different ball game. Bailey speaking today at 2 p.m. and also we've got another G20 meeting. These seem to be going on an awful lot these days as well. And then Bailey's out again tonight as well, speaking once more, along with the FOMC meeting minutes. And this is tomorrow, not tonight. These days where you get, or the weeks when you get a bank holiday, it certainly throws you out where you are with the day. So today, Harker, tomorrow we've got all of this, so I should probably reiterate this tomorrow anyway, but that's what the main event for this week. Can't see anything else really. We've got FOMC member later in the week, but otherwise a fairly quiet week there, apart from, like I say, the big one is those CPI numbers, which are forecasting quite a drop in them, I have to say. Okay, let's get on. Let's have a look at the markets, see where they were yesterday. Quick whistle-stop tour through the markets so that we can get back into the groove from today, as everything should return back to normal. So kicking off with the Dow, you can see yesterday we were down and then we were up. We're still not above the 33,688 that we saw put in last week. This needs to be taken out if the markets are to move higher. 30-minute charts, as I said yesterday, the market sold off, not as big as it looks. It's just under 200 points there, and then the market rallying 256 points. It just looks more than what it actually is, but nonetheless, still a good move back. You can see how they bought back in here at around 3 o'clock yesterday afternoon, once the Dow opened. Overnight market moving down there. In the German DAX, nothing since Friday, but the market gapping higher on the overnight there to the 15,707. The market currently making its way back down, as can be seen there. We've got a gap. Needs to fill the gap if it can. That means another 50 points to the downside first before moving back to the upside. Again, not a lot to see here because obviously, say the markets have been on the electronic since the Friday of last week, got the 6th of April there, and then now we're playing catch up with the 11th. So yeah, true reflection here with Trade Nation's MT4 platform. So we got the gap obviously because the Dow's moved high, but the gap tends to like to be filled. So like I say, today is really just a quick whistle stop tour around the markets to see where they're actually trading at the moment. Let's just have a look at the 5 minute in a bit more detail. so we can see what has happened. And there you can see we've got a gap of 50 points because the Dow moved higher, so as the DAX to reflect it when it's opened on the overnight. But not a lot to report there, apart from in the daily chart it will need to take out or maintain above that 1507. But also we've got a new one there of 15739. So if you think of the 50 above where we are at the moment, this line here is really where the market needs to break in order to move to the upside there. In the S&P 500, also same as the Dow yesterday, coming back, still needs to take out that 89 that we've had drawn in for some time, which is here, and just move to the upside. There's the high that it needs to get through at I think 14,114 by the looks of things. Yesterday, see the market sell off down to the S3 and then move back to the upside there. The S3 tends to see prices 90+% of the time find support or resistance depending on whether it's an R3, and then move in the opposite direction. In the FTSE 100, this is the first time this has been open since Thursday of last week. Gapped up on the open at the 78% retracement in the daily chart at 7793, trying to make its way back up to the 7876.9. In the electronic session for yesterday, well, this is actually Good Friday, electronic session Good Friday, market continuing to move higher, same as the DAX A, seeing the market gap up as well, so we've got a bit of a gap there. Market up, down, and looks poised, ready to move to the upside and follow through with what the Dow did during yesterday's trading session. In the currencies, GBP, JPY, this trading up to the 78% retracement. This was open during yesterday. 30-minute of this one, as you can see there yesterday, finding support with a cluster of volume at the DP and the close and the 200 MA, and then reversing off this and then moving to the upside. Overnight, as the dollar starts to lose a bit of strength, GBP, JPY also down slightly there, as can be seen, needs to get back above the high in order to move higher. Pound USD down yesterday. The dollar was up, we saw in the news headlines, so we need to close above this recent high in order to keep moving. Bailey may help that when he speaks tomorrow. 125,248. Pound's really strong at the moment, isn't it? But then I suppose given the dollar weakness, no surprise there at all. Let's just have a look at this in a bit more detail in the weekly chart. So you can see where we go back to after Truss disappeared to there. So we're at 124,463, and we're through this last week. We got that high there. If I just drag that out, you'll be able to see it at that 125,248. And in the metals yesterday, silver down, not as much as gold was. It was monkey hammered yesterday, but trying to move back to the upside on the overnight there. There you can see also yesterday we're up in the pre-markets. Then the COMEX opened, and you can see that the market was pushed all the way back down 89%. And then we went 89% of that move before the markets moved up on the overnight, trying to get back above that $25 per ounce level, which is very important. Meanwhile, in gold, you'll see down sharply yesterday, but reversing on the overnight. Put some fibs on this to get back to that high. The high being there, 2030. The all-time high is 2070, so we need to take out that recent high that we saw last week of 2030 there for the gold market. In the 30-minute chart, you can see how it was crushed yesterday, and also on Good Friday as well on the electronic market. When you've got central banks buying more gold than they've ever bought, it's to their favour to use the paper market to suppress the price, to allow them to buy the spot at a lot cheaper price. So don't be surprised to see this under pressure, and given a quiet trading session, they will do exactly that. Crush the price in the paper market, sell billions of ounces in a false market in order to buy the real physical gold so that they can add to their accumulated positions that they've done or been doing since 2010. So a quick look at the dollar. Forgot to look at that after the pound. You can see there it's moved up for the last few days, down on the overnight, and then the gold silver ratio. Also you'll see there that silver yesterday down because it didn't move down as much as the gold price was hammered, as we've just spoken of. So yeah, 76 is going to be an interesting area. See if it gets down to this, where it got down to in January. So we'll have to wait and see, but certainly making its way back there at the moment. Okay, that will do it for this one. Let's see how the markets all kick off and see whether the banking crisis returns or not, or whatever is going to be the next thing. But it's certainly not going to be plain sailing as we go through the year. It might be fine at the moment, and they can continue to move the markets higher, particularly tomorrow if the CPI numbers come out lower than forecast. Okay, that's it for this one. As ever, thanks for watching. See you in the next.